All right, so we'll first go over the first section of the model, the diluted market cap. So here at the top, you want to freeze these rows so that they're always visible. You have a company symbol. We have the date that the earnings were announced on. And the reason this is important, we want to know if it was before open, so that's why this says BL, or if it's after hours, so you'd put an AH there. Because, for example, this was announced November 6th in the morning, so the November 7th stock price, the movement is what's reflecting this new information. Whereas if this has been announced November 6th after close, then it's the November 7th stock price movement that's reflecting the new information. So that's why this is useful to have here. You also want to have a row for when the period ended. So most companies follow the calendar year, so their quarters end, end of March, end of June, end of September, end of December. You can see here Office Depot's is a couple of days off, so their fourth quarter ended December 29th. Some companies follow a fiscal year, which is very different from the calendar year. So that's why it's good to know when the quarter ended. And then here, finally, you want to have a key letting us know what units the numbers are in the model. And then, we have here our quarters laid out nicely. So it's easy to, when we're looking at the income statement later on, it's easy to reference, where we are in terms of the quarterly reporting. This information here, you want to have your date, your current price, and your reported diluted weighted average shares outstanding. And so the reason it's nice to have this information here at the top is because if we trace where it's being used, so for example, you could see here we're referencing the current price. So instead of having to go update the current price cell everywhere in the model, we just know that we update it once here and it should flow through, to all the other cells that are referencing it. Here we have our diluted share count. And so this is nice to see because we can track whether the company's, is issuing more shares. So in which case the diluted share count is increasing, or in the case of Office Depot, they are repurchasing some shares. So you see that the share count is actually decreasing. And so that's what these rows here are for. This is telling me that during the first quarter of 19, they repurchased 4 million shares at a price of $275 per share. They spent $11 million, and so they still have $89 million left for their repurchase program. So you can use this information when you do your forecasting, for a year, 2 years out, you can kind of guess what the share count might drop down to based on what's left for repurchases. And you can get this information, usually when there's a repurchase plan in place, each earnings report, the company will tell you, how many shares they repurchased and how much they spent. Now, the reason we calculate the fully diluted share count is because, for example, if we go into Office Depot's 10Q, and so I'll show you how to navigate there. If you go to the SEC's website, let's start from the home page. So here you click on this link, Company Filings, and you type in the ticker symbol, and you can access here all of their filings. So it's organized obviously in in chronological order, with the most recent filings here at the beginning, and then going backwards. So if you want to see their most recent 10Q, there it is. Open it up. Do a search for the word diluted. So you navigate down to the income statement. Here we see what the diluted earnings were, but we want the diluted share count that was used to calculate the diluted earnings. So here we have the basic earnings per share. We always use the diluted earnings per share because it includes, some options, warrants, etc. that are going to, lower the future earnings. So here we see the denominator that they used, diluted weighted average shares outstanding, was 549 million. So that's where this number here is coming from. That's the most recent diluted number that the company reports. But now if we do a search for the word anti-dilutive. You see here at the bottom of page 21, they tell us that awards of stock options and non-vested shares representing approximately 13 million and 18 million additional shares of common stock were outstanding for the third quarter and year to date. So these were not included in the diluted share count because their effect would have been anti-dilutive. So you see this a lot with companies that currently have a loss, and so they don't report these extra shares because it would make the loss look smaller than it actually is. So we need to account for these shares somehow. So here we have stock options 13 million and non-vested shares 8 million. Now, you don't necessarily always have to include these numbers. For example, and this doesn't apply to Office Depot, but I just filled this number in to give you an example. If they had 5 million RSUs outstanding, and the average exercise price of each one is $10, so that would mean that the current share price of $2.52 would have to more than triple for these RSUs to be exercised, right? So obviously at that point, the investment has gone up a lot, and so this isn't going to affect our share count. But these exercise prices down here, $3 and $2.90, they're much closer to the current price, and so that's why in this column, I would put yes, we're including these two, but no, we are not including these 5 million RSUs. And so if you set up your sum if formula, to include these figures, if there's a y here for yes, and so that's why the new fully diluted share count is going to be 570 million. All right, and so that makes a difference because obviously you see our new market cap now is 1.436 billion, whereas the reported market cap here is 1.383 billion. And so because there's a bigger market cap here, is that it would look like there's more upside if we were to use this smaller number. And so that's why you always want to check for these anti-dilutive shares.